In a surprising twist, stock market short sellers, the bears who were once a source of anxiety for investors, are now giving up and retreating as stocks continue to rally. This shift in sentiment is evident as bearish positions in exchange-traded funds reach 3-year lows and shorts in S&P 500 futures are rapidly unwound. On the other hand, the number of optimists is growing rapidly, with bullish newsletter writers outnumbering bearish ones by a ratio of 3 to 1. The market, which previously thrived on pessimism, is now losing one of its key catalysts as concerns about the Federal Reserve's battle against inflation resurface. While the market experienced a strong rebound, corporate earnings are expected to decline for a third consecutive quarter. This puts the market to the test, as investors demand results to justify the recent performance. The article highlights that short sellers have incurred significant losses, and signs indicate that skeptics are retreating. Even longtime bulls are questioning whether there are too many optimists, and caution is advised in the face of high bullish sentiment. While there are still shallow equity pullbacks, traders are awaiting more economic and earnings data to assess the fundamental outlook. As earnings season approaches, analysts predict a 9% contraction in second quarter profits for S&P 500 companies. The lack of confidence in the economy is reflected in active funds reducing exposure to economically sensitive sectors like energy. While the overall market, especially the tech sector, has seen a re-rating higher, cyclicals have derated due to concerns about an impending recession. The article concludes that for stocks to continue moving higher, there needs to be broader participation outside of the technology sector. Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching. Now let's get into it. The stock market has been on a remarkable journey, experiencing its strongest first half in 5 years. But what's caught everyone's attention is the changing landscape of investors. The bears, the short sellers who thrived on pessimism, are now retreating. It's a surprising shift in sentiment that's leaving investors wondering about the future. The data speaks for itself. Bearish positions in exchange-traded funds have reached their lowest levels in 3 years, and shorts in S&P 500 futures are being unwound at the fastest pace since 2020. On the other hand, the population of optimists is growing rapidly. Bullish newsletter writers outnumber their bearish counterparts by a ratio of 3 to 1, the highest level in quite some time. This changing landscape poses a challenge for the market. After a strong rebound, concerns about the Federal Reserve's battle against inflation are resurfacing. And just when things seem uncertain, corporate earnings are projected to decline for the third consecutive quarter. Investors are now demanding results to justify the market's recent performance. In recent weeks, stocks experienced minor declines as concerns about the labor market and services activity fueled worries that the Fed would continue raising rates to combat inflation. Nevertheless, these pullbacks have been relatively shallow. Traders are eagerly awaiting more economic and earnings data to gain a clearer understanding of the fundamental outlook. And speaking of earnings, it's that time of the year again. The big banks are gearing up to kick off the earnings season. Analysts predict a 9% contraction in second quarter profits for S&P 500 companies. This will undoubtedly provide crucial insights into the health of the corporate sector. As we assess the current state of the market, an intriguing divide comes into focus. While the overall market, particularly the tech sector, has experienced a re-rating higher this year, economically sensitive sectors like energy have faced derating. Many investors remain cautious, fearing that an economic recession may still be on the horizon. The key question now is whether stocks can continue their upward trajectory. To ensure sustained growth, broader market participation is essential. While the technology sector has been leading the charge, it's important to see other sectors join the rally. As we navigate the ever-evolving landscape of the economy, it's crucial to stay informed and adapt to the changing dynamics. Remember, Knowledge is power. So where do you think the US economy is headed? Up or down? Let us know in the comments section and make sure to subscribe to the channel for more. Thank you for watching today's update. Stay tuned for more insightful videos on the latest economic trends. Until next time, take care and happy investing.